Weekly update for the grain markets, November 5th. It is 8:48 a.m. Eastern Time. I'm Rich Paz for Critical Point. Let's begin with the daily chart here for the December corn futures. Market hesitated here at an upside objective, made a stab, couldn't make the next objective, gave us a negative reversal day, and I've been telling you, watch out for a negative reversal day as a sign of a level 3 top, as well as an opportunity for larger, more important tops like level 2, level 1, that I'll discuss in a moment. At any rate, the market came down. I warned you they might bump its head on the 5-day average, roll over, and it's gone lower. A bit tricky here. The model's saying it can bounce today maybe into a level 4 top, or it may even bounce into Monday. But the problem is, did it really put the low in? It's earliest allowed for a low, for a bottom, but it tends to favor more downside today than up. As for the 5-day rolling forecast, not much to work with. It's kind of sluggish. What it is it's eyeing the USDA report coming, saying there could be more unknowns here, how they want to handle that. But it's suggesting they ought to do more selling into the report. But it's also suggesting it can bottom the day of the report, then up, or it can kind of flounder around, but it can also have a downward bias. So we'll see. I'm a little suspicious the report isn't going to be bullish for them, or not enough, and that even if it's neutral, they're going to want to sell more. I think we're going to have lower prices after the USDA report, and the level 3 bottom does not have to show up to the end of next week to even the start of the following, so it can be a down week. I think corn's on its way to 545, maybe down to 535, okay? But watch the 5-day averages, nearby resistance, and obviously a break above it. We may have to consider a run to 571, 579. I think that's about it. So there's definitely potential to still bounce it. Maybe they'll get excited ahead of the report. Maybe the report's going to be bullish too. But I think overall, everything I'm coming up with, South America, China, global, U.S. harvest, refilling the bins, the dollar that's now rallying some more, some of these other factors, I just have to be bearish. And it's just a matter of, is this USDA report going to help out? Or is it going to interfere? And I think if it interferes, it's probably just temporary. It's probably no more than noise. Okay, 5-day stochastic acting very bearish, but it's also oversold. Okay, but I would say that spread's wide enough to suggest lingering near-term downside momentum the next 1 to 3 days. In other words, down into the report. Now, let's move on to the weekly chart, which I think is more important and more interesting right now. I'm not too concerned of being accurate on the daily. I'm not too concerned being accurate into that USDA report. What I want to focus on, what's going on for the bigger trends. We had a level 1 bottom, okay, occurred in about the latest allowed, all right. We'd flip-flopped. We were trying to catch it on the early side, turned out to be here. We had a level 1 trend, but the model's saying it ought to be over. This is probably the latest allowed. Maybe somehow we can come up with some story. Maybe the USDA report can do something, get us more bulled up for about a week, but that's probably about it. We're working on a negative weekly reversal. They shot at it above the target that I had for some time. Didn't think it was going to work. I thought the market was bumping its head in here and rolling down. So it was more bullish right at the last minute. But it looks like the target's worked, and when it comes back down out of a target box, got to consider that's bearish action, and it's a negative weekly reversal. Unless they come in gung-ho and buy this for the rest of the day, I think it's going to stick as a negative reversal. And what I've been telling you, get a negative weekly reversal, we want to be thinking level 1 top, level 2 top, okay, not just a level 3 top, and it's all 3, okay? So the model's saying this market's going lower into December 6th. In other words, lower into the December USDA report, and may even stay down to mid-month, meaning after the December USDA report. However, I kind of thought back here that once we got that top end, we would actually see the market down to 5 to maybe starting to work on my longer-term downside target of 480. I will admit, I think we've got a nice seasonal rally, seasonal demand here. People are complaining they'd like to see the actual demand from China. They're seeing numbers suggesting it's there, but they don't feel like they've been seeing the love, the buying, the following through, okay? I am willing to consider this market comes down to level 2 bottom and does not take out the level 1 bottom at 506 3/4. that, and then rebounds again, that we're in some kind of range here for a while. But I think ultimately, my long-term stance, I'm bearish into June of next year. I may be bearish into November of next year. And I don't think we're going to have a crop problem next year. I'd love to see USDA actually come out with a record yield, which is some are forecasting, and the market may be considering, boy, what if they're true on that? What if they're right on that? I'd like to see that, because then I would probably dial in yield may slip next year to 172, but that's about it. At least that would tighten up the market into harvest of next year and help us with a seasonal up move into 2023, which would be a better setup if we got a crop problem to get a major bull market. And I think we'll get the crop problem, and I think we're going to get that bull market, but I'd rather see the ending stocks not get too high here ahead of that. And but I can't rule out even a minor record high in yield next year as well. So that's my long-term stance. So I think I'm willing to dial that we got some kind of floor price, some kind of fair valuation going on here. But I think these rallies are not going to last that long, and they're nothing but bear corrections within a bear market rallies. Okay. So I think we're on our way here. It's over and done. Weekly stochastic, overbought, narrowing spread. Doesn't really have what it should have. It's warning a top can work. It's not extremely overbought, so therefore overbought can just work. As you get extremely overbought, you have to be a little bit nervous that you could still be early. The market goes higher, okay? And the indicator backs off. And then the market goes lower, and then the indicator backs off some more, and that's your actual better sell signal. We don't have that set up, okay? I think there was nothing more than a knee-jerk reaction, but it was a very good one. There was some good demand built into that recently, okay? A lot of corn moved down the pipeline, but I think the farmers sold it. I think he's going to sell into the U.S. report. I think he's going to wind up selling later, whether he wants to or not, because I think the funds are going to back off, even though I realize they've added to their position, okay? Some of them are very slow of returning bullish to bearish on a long-term basis here, okay? They can still see some value to the upside here, that things can remain tight. Bottom line, though, as this market is going lower, I'm bearish. Here's the U.S. cash corn market, filled the gap, and it's bearish, and we got a negative reversal for the month, okay? I think it's going to stick. I think it's over. Level 1 top, it's going lower into Feb, March, maybe even April for level 1. Get some kind of rebound, lower still. I just don't think it can bottom to June for the next level 1, and the earliest allowed for something long-term. And if we get a good crop, we may still get a weather scare into level 1, and then a good crop, it can be lower still. We can get 430 to 380 corn next harvest, believe it or not, even with all this inflation, believe it or not, even with these higher fertilizer costs. We could be setting up for 2008, 2009, a very high fertilizer cost, trim the acres back a little bit, but not as much as everyone was betting on. And then the La Nina turns to El Nino, and we get a great crop. And that can all work again, okay? On the other hand, I can see variations of that. There's many variations, actually, where we get a slight crop problem there, a little bit of a hit. And then we just have to gamble on what's going on with this fertilizer prices and energy. And I think it's over for crude oil. I think it's over for natural gas, pretty much. I think we're going to ease back. And I've already seen some numbers that those super high prices for natural gas has not translated into necessarily super high fertilizer prices. Therefore, the fertilizer companies are making lots of money. The price has been run up off of that news much more than it should have. It may be coming down, but it may not come down fast enough either. What else do I have? Let's move on to some of the foreign grain markets on the corn side here. Give me a second. This is South Africa corn. Yes, it's rallying, but it's really on the upside of a long-term range. And the news is probably lots of corn planted for South Africa. And let's see if I can quickly pull up some of my other corn charts. There's the Black Sea corn, negative weekly reversal here. Here's the Brazil corn, beautiful negative weekly reversal. The model reverted. It's saying you could have a level 1 top here or here, and it just slightly edged it over. I kicked it a little bit, saying put it in line with the U.S. Doesn't really matter. Trend's going lower for at least a couple of weeks, I think, for Brazil corn. It could stay down into mid-December. We can come up with an alternate forecast. It looks as though it could bottom ahead of the U.S. market. And I think that makes sense because they had a terrible year growing corn. But they're probably going to grow a lot of corn for next year. Okay. Now, what else do I have? Oh, the Japan corn. What I wanted to see, gave in, okay, pulling down. This is nothing but a level 3 rally, okay? That's all it was. And going lower, it should be in line with our forecast. It could possibly bottom well ahead of the U.S. market, but I think I've come up with some alternate scenarios where it could be bearish right into mid-December, right along with the U.S. market. March soybeans, I'm kind of upset. The model had been showing with the 5-day rolling forecast time for a big down day, but it had been doing that for a while now. It was just like it was edgy. It was saying, we're going to have a big down day. And I kind of downplayed it when I drew the 5-day rolling forecast. And here we finally got one, okay? Big down day, came down into our 1235 to 1227, and look at that. Bounced it back up here to the close. Love it. It's respecting it. It's back down today, and the model's saying it ought to go lower into Monday morning, but it's also due for a top sometime Monday. So kind of iffy. Is it up or down Monday? Don't know. And then we have to realize that on Tuesday, we can get a USD report, and the model's saying, we could possibly revert again, that really the level 3 bottom was here after all, and we can have a bottom on the day of the report. Problem is, the best forecast is to leave it here, level 3, and the market's going lower after the report. I don't think we're going to get a bullish report, and if it's a neutral report, I think there's going to be other factors that make them sell anyways. They may not sell aggressive, it may not be all that bearish, but I think we better allow a return to this low, okay, at 1206 for the March futures, and I wouldn't rule out 1193. Eventually, not so sure it occurs next week for a level 3 bottom. We'll get a level 3 bottom. We'll probably see it bounce about 2 weeks from now, okay? But I think the larger trends suggest there could still be more downside. 5-day average is nearby resistance. We've wiped out the upside targets. If it wants to rally, we'll have to come up with new targets. The model's pretty convinced it's going lower. 5-day stochastic now widening spread, even though the market hasn't done much today. It is oversold. I think it's probably going to get more oversold. I think it needs a few days of widening spread and then narrow down in that level 3 bottom. I think it's going to work, that it's going to bottom after the report. But I will say, because it is oversold and I have seen widespread stochastics all of a sudden just flip in a single day to the buy side, we cannot rule out maybe they like something off of the report due next week, next Tuesday, I believe. Okay. Now let's zoom out for the larger trend. This is our March weekly chart. We have not updated the 5-week rolling forecast. Level 1 top as of last week, whereas corn topped this week. We can even come up with a truncated failed top to make it coincide with corn. Don't need to do it, don't care, but it is a possibility, and it should have been the latest allowed for doing that. Trend should be down a level 2 bottom, but the interesting thing is, it can still bottom in the latter half of November. It does not have to keep going lower like corn. Now, it's possible they beat corn hard enough that maybe even corn doesn't go lower in the first half of December, but it can't go up either. Don't know. And maybe we'll come up with some alternate forecasts to get these two markets to coincide better, but it's suggesting they're going to get the selling over sooner in the bean market than the corn market. And I wouldn't rule out all the way down to 1148, even though the 5-week falling forecast is not showing it that low. But do keep an eye on the level 1193 area, that it's a possibility here. And then we can get a bounce in December on into January. But just like the corn market, the long-term forecast is still bearish into spring of next year, and it may be bearish into fall of next year. So I just feel like any rallies are just bear market rallies. Okay, that's all it is. Stochastic, not yet on the sell side, but it's narrowing spread. If they want to sell it some more next week off the USDA report, we'll probably get a sell signal. It is close to mid-range where you can get secondary buys or sell signals. Overall, I think the indicator should come down. We get lower prices in the beans, but we don't get a lower price or lower value of the indicator. that could increase the odds for a better bottom, a little better bounce later. Until we get the highs taken out this week, last week, and the same for corn, I just have to be bearish this market. Now, let's see what we've got going on in the South America beans here, if I can find them quickly. Right here we go. And here we assume we did a little model revision here of putting that level 1 bottom a little closer into what's going on with the U.S. market, but it actually might have been 2 weeks ago. I believe it's just moving lower, similar to U.S., into a bottom maybe the next 2 weeks. I can come up with an alternate scenario where we can stretch that one into early December. And I like the response this week of getting in line with the U.S. They want to compete with the U.S. And even though you would think they'd be running out of beans, I'm seeing heavy-duty exports still from Brazil. Those beans, those boats are moving. All right, let's swing over to the Chicago. I don't have any targets here for a lot of these foreign markets here. I just said Chicago. What I really mean is I want to find out what's going on in China. Here's the number 2 beans, which I assume is being impacted by the import of Brazil and U.S. beans. Okay, acting bearish, is oversold. Okay, but I suspect there's a little more downside for that contract here. And the number 1 beans, more bullish than I would have thought, doesn't have the import impact. I think it needs to roll over. I'm still looking for a level 1 top for that market, but until it trades below the low of this week, I guess we have to assume trend is up and away. No signs of a top. That's a little bit of a concern here. And I don't think I touched base on China corn, did I? Let's bring that up here. Still looking for a level 1 top in it. Stronger than I wanted, something not quite right. I am concerned. No sign of a top, but trade below this week's low, I think we got it. I think I want to be bearish there. China soy oil still remaining strong here for the overall global soy oil market. On the U.S. soy oil, turning down like it should. Evidence of a level 1 top. Should swing lower at least into latter half November, if not into December for a level 2 bottom. May find support, but if it ever were to violate this level 1 bottom before by time of the level 2 bottom, or even sooner, I would be concerned early next year the next level 2 and a level 1 bottom would be even lower still. Okay. I think that's what I've got for there. So I'm not convinced the biodiesel is going to support the soil all that much, and I don't think the soil is going to support the soybeans all that much. But frankly, soybeans, most years throughout the entire history of soybeans, really don't pay that much attention to soil. Okay, here's the December Chicago wheat. Level 3 top. Believe it's also far more important tops than even long term. 5-day rolling forecast didn't change it too much. The model's a little concerned of how can it really predict what's going to happen by time of the USDA report, but it is showing level 3 bottom can show up as soon as the USDA report. That would be early allowed, however. There's still room to go lower. My guess is it's going lower. Okay, I just don't think they're going to like the USDA report, or they're just going to go on with other things and sell it after the report for all 3 markets. 5-day average is nearby resistance. Okay, come down to this old level here that was an upside resistance and target. I think it's going to bump its head, go lower still, and it could go down to 753 to 740. Widening spread on this daily stochastic. It's leaving mid-range as if it's headed for oversold. I think we best assume lingering near-term downside momentum, meaning the next 1 to 3 days. I think they sell it into the USDA report. Maybe they bounce it for a day or two. I think back down again. And I'll show you now of what's going on for the larger trends. However, keep in mind, it did bump its head on our upside target. I don't think this target's going to work at all. Okay, so we're canceling that. I'll leave it on there for now. Okay, but I think it ought to move lower. There's a chance for a level 4 rally, maybe by Monday, and then down in the report. Again, it might be rather limited that they just want to wait on the report. But I got a feeling next week could be a down week. And I like the weekly chart much better than the daily. Kind of feel the same way with corn and soybeans here. Level 1 top in place since it's higher than any high during the year. then we also have to call a minor long-term top in place. It could even be major. If it's major, we will not see wheat above the high of this year for the next several years. Okay, if it were to occur, it'd be very brief and probably fall apart afterwards. I don't think it's major for this particular wheat market, but I'm going to talk about the Minneapolis in a moment where I got a different attitude. But I think, just because in 2023, I think we're going to get the crop problem looking for. It could delay to 24, could include 24. It could occur next year, but really doubt it. But it could be somewhat of a crop problem next year to get the ball rolling, being bullish into 2023. So I'm going to leave the door open that prices can be near this high by 2023 and maybe higher still. Then we can be a major bear for these grain markets. But I'm feeling quite confident we just found a minor long-term top, even though I realize if you look at the fundamental scenario, it's possible somehow wheat remains strong into next year in Europe. And maybe that helps out the U.S. And maybe the U.S. can even be kind of firm at least into next year. Fascinating stories here on wheat, how this could be some lingering upside momentum that I don't realize is capable. I can see the fundamentals there, but I can also see it's time for the fundamental to shift, that we want to focus on, but someday we're going to get more wheat production anyway. Someday this is high enough price that they don't need to pay any higher, okay? So I don't want to be an outright bear here by no means in wheat, where I can be a bear in corn and soybeans. But at any rate, I got to call it, and that's what I'm doing. So I think it's more than just a level one top. Where I could be wrong is there's something like the energy markets where it's really a level two. Pull it back, bounce it up into December, give me a level one. I'll throw another dart for a long-term top. Doubt it. I like this negative weekly reversal this week. Overbought. Not extremely overbought, which means the overbought can work right off the bat. No fuzziness, no false sell signal, and then a right signal. It can work, okay? 5-week rolling forecast is just saying be bearish. I'm not so sure we've got this position right price-wise and some of the level 3 swings or anything. I think I just like the general idea that it could be bearish into December now, right along with corn. But the model is warning it can bottom in the latter half of this month, okay? So we'll see what they give us in just the next couple of weeks, see what they give us out of this USDA report. 5-week average is nearby support, okay? It's overbought, so it is warning the model can be right, looking for a top of this importance, okay? It can work, so I got to be bearish on it. Now, how does that translate to some of the other wheats? Well, as I've told you, we got to keep an eye on the French Matif milling wheat. Still looking strong. It's pulling off the high of the week. Could be a level one top. I will give it another week. I think if it's going higher 2 or 3 weeks from now, that'll be a time stop for me when I'll say, something's wrong here. Can this be bullish into December? Can it be bullish into early next year? I do think there's a chance for a long-term top also arriving with this level one. It might be safe for this market, safer to wait for it to violate last week's low, although violation of this week's low would be a clue of being in the right direction. Very overbought, rolling over, trying to give a sell signal even as the market's up. If it finishes with a sell signal this week, that's going to be a low confidence, low conviction sell signal. It can still go down all of next week and you could be trapped waiting for a lower close. But normally I would like to see the lower close with the sell signal. That's your highest confidence, okay? All right, that's that wheat. If we move over to the Australian with no model analysis, still looks strong to me. No evidence there. But however, we get into the ice feed wheat. Also pulling off the high a little better than the French Matif, acting very much like the Matif wheat, the milling wheat, due for a level 2 top. Not so sure that's a level 1 though. So is it an evidence that it can be higher later? Is that a clue that we're wrong on the Matif? Don't know. I'm just going to leave it as is, that I'm at least looking for a level 2 top. We ought to get a setback in that wheat market. The Black Sea wheat, turning lower here. And let's see, I thought I had another wheat, but maybe that covers all of them. So bottom line is, I think it's just time to pull it back. Now, I want to move to Minneapolis, U.S. wheat. Negative weekly reversal, first one in how many weeks? Several weeks. The model's saying this is at least a level 2 supply-demand business cycle. Supply-demand, okay? It's saying even though it's sloppy, broken up, there's another one in here and another one here, and it's saying this can be a level 1 top, and it can also be the minor long-term LT3 or 3-year business cycle, which can actually be 3 to 4 years and rarely squeeze into 2 calendar years. Overbought, rolling over, sell signal this week with a lower close. So now we are of high conviction, high confidence that that sell signal can work. Doesn't guarantee it, but it can. I think it's over for this market. And if it's over for this market, I don't know why Chicago and Kansas would not go lower and return to a normal market. And I think they are a bit high priced. Okay. So I really like what I see in this market. I think it's over. Maybe after the USDA report, we'll find it wants to run higher, and maybe it's going to run higher in December, but I don't think so. I think it's over for that market. And now here's the key. This market is of higher probability of putting in a major long-term top, meaning we're looking at the highest price for the next 5 years, okay? That it does not have to be higher by that 2023 crop problem, where Chicago can be and Kansas can be. But I don't really want to go there. I'm not making an official call. If I miss it, I miss it, because chances are it would rebound anyways, okay, by 2023. But the point is, this market can go lower into a bottom sometime next year, right along with wheat, corn, and soybeans. So put me down as long-term bearish this market, with obviously that I have to backpedal and rethink if it takes out the high of this week. Simple as that, okay? A lot of these markets would have to go lower, considerably lower, to really prove it's right, and then you've missed the trade. So you have to almost always take the risk of being early, unless the signal is at the latest allowed, and then you still have to take the risk of, well, maybe it's too late, that you're just flat out wrong. I have nothing to say of what's going on in some of this corn basis stuff. I think the cash markets were right in line with the U.S. market, and I'm just not convinced they're going to really chase after corn here. If they rally, we could still bring the futures down. As far as some of the outside markets here, I really think it's over for crude oil for a while. And let me find the heating oil and gasoline. Here's heating oil. Heating oil. Level 1 top in place. I think this looks really good. This one stuck with that idea that it was going to be a fall top when the crude oil market was warning me of top back in summer, and you may recall the complications, problems I had to keeping up with it. This one kind of just stuck with its plan, and it worked. I think it's over. You could argue that a level 2 bottom could come in here really soon, and maybe it's going higher in December, and granted, a cold winter could cause some issues, but I'll tell you what, they're already backing off on the cold winter stuff, and I kind of thought they would. It didn't make sense to me that we're going to also have a wet winter. That doesn't mean a cold winter, in my opinion. Weekly stochastic is about as bearish as you want to get, okay? It's just outright bearish. I think there's a level 2 bottom in here that didn't work near the top, and it's just heading lower for several weeks now. But heating oil seasonally can remain firm in coming months. Now, the gasoline market, like it, and I think it's probably going lower into late December on into January. I think it's put in its minor long-term top. I'm bearish these energies into sometime next year. And I question if even the natural gas market really has what everybody wants to make it go higher, even during a cold winter. I think it'll be more of a basis play, perhaps regional cash play. And yes, it could just explode off of cold temps, but I'm not convinced the futures are going to go higher. Here's the nat gas chart, having trouble staying up near the highs. I think eventually just rolls over and goes lower. And now what do we have here for the dollar index? Okay, which you know my thinking. I don't think it matters for corn and soybeans, but I'm starting to wonder about that. There's always brief moments it does. I always thought it was more of wheat, but the wheat market paid no attention to it because of the fundamentals. But what if it begins to pay attention to it now? Look at this. New high for the year for the dollar index, and what I've been warning you for a few months, that I changed my mind earlier this year. It's the dollar's actually in a minor long-term bull market. It could last well into summer of next year. It may be over in just a few months, though. It fits inside of what I think is still a major long-term bear market that suggests a lower dollar in 2023 alongside higher inflation and higher commodities and probably higher grains. So they knocked the dollar down because of that. It's quite possible inflation will be moving faster than the interest rates. So that could give it an edge. However, I no longer think the dollar index is going down to 85. I've been looking for it for years, given up on it. I think even in a minor long-term bear market, it doesn't go any lower than 89. So I think it's also possible the dollar is range-bound for several years to come here. At least the moment this is not looking good. I think this was a level 1 top, level 1 bottom. The dollar now can rally into February. Can it do it off rising interest rates? Yes. And what's my take on rising interest rates? I think instead of sideways to down into next year, and I was thinking into spring of next year, into April, maybe even into fall of next year for interest rates, I think I want to say sideways to up now, and it has to do with the Federal Reserve development. And I think interest rates can move higher ahead of the Fed. I think the Fed probably wants rates to do that, to do the work for them. And I think that can temper inflation. I don't think inflation can rally fast enough now to keep up with higher interest rates, but I don't think interest rates are going to explode. I don't think they're going to rally too fast to hurt the economy, hurt the stock market. There may be brief moments that it concerns commodities and stocks, but I don't think so. I think this is just a gradual move higher, gradual recovery here. The realization, hey, we've got a growing economy coming for years now. It's time to raise interest rates along with it, and the Fed needs to raise it just to have a cushion. So give them a gosh darn break, will you? They need to do it, and they will. Okay, and very pleased to how Powell handled this one. Boy, he handled the prior report very well too, even though he's had some poor ones. So I think we're on track with this. I think this is going to support the dollar, all right? But I'm not convinced it's going to support gold all that well, but gold could be quite a bit higher by 2023. But if it violates the low of this year, anytime now through next year, I'm a major long-term bear in gold. Not in the sense of going down quite a bit. I'm just saying no record highs for many years to come. And we know all these commodities are due to top this year into 2024, and then they're going to have a difficult time later this decade. Now, how about the crop scenario? I think we're going to get a decent crop next year. I think it's actually going to be lower yield than this year if USDA pops it to a record. But what I'm coming up with is that the C model is saying crop problem no later than 2024. Some of you ask, well, what happened to the R model? Well, the R model helped us in 2017 and 2019, okay, and then it's off the table. It only works for a range of years during a decade, and that range moves and shifts around. And I did some research here yesterday and found, the ingredients that go in there to create a climate problem, that creates a weather problem, that creates a crop problem, they're not there yet, and they may not even be here to 2025. I think the R model is going to have a crop problem showing up 2025 to 2029, hopefully no later than 2027. But the C model is saying, okay, you could have a crop problem then, but it's not going to be as important as the one due 2021 to 2024. So I don't think it's going to be a major bull run. But I think we can have a rebound in grain prices later this decade within what should be a major long-term bear market to the end of the decade once we get the major long-term top due now into 2024. Hopefully that makes some sense. Super cycles, on the other hand, are still bullish in the next decade and then bearish for decades to come. So there's still a good chance of a major crop problem next decade and major inflation and all that fun stuff. But right today, it's time, I think, to work these grains lower into bottom next year. I think all we can get is bear market rallies. Past results are not necessarily indicative of future results. Have a great weekend. Stay safe. Stay healthy. Thank you.